Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Huaxin Building Materials Group Co. Limited Annual Report. Huaxin Building Materials Group Co. Limited offers a diverse range of businesses and services. At its core, the company manufactures and sells cement both domestically and internationally. In addition to cement, Huaxin provides aggregates, ready-mix concrete, and packaging materials. The company also specializes in producing various building materials such as mortars, bricks, slabs, aerated concrete products, environmental protection walls, curtain wall hanging boards, and anti-corrosive tiles. Furthermore, Huaxin engages in waste management through the operation of platforms that convert selected waste streams into fuels. Innovative ventures include research and development in data science, which likely involves leveraging technology to improve operational efficiency and decision-making. Additionally, the company develops software, indicating a commitment to harnessing technology for business growth. The Huaxin Building Materials Group Co. Limited market capitalization of $35 billion is significantly larger than the average industry peer of roughly $4 billion. This shows that Huaxin Building Materials Group Co. Limited holds a significant advantage in their industry. And Huaxin Building Materials Group Co. Limited trades at a lower price-to-earnings ratio of 11 times and a higher price-to-book ratio of 0.96 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Huaxin Building Materials Group Co. Limited. Itself. The leverage on the balance sheet appears elevated, with liabilities of 54% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 5.18%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be categorized into several key areas. Revenue growth is primarily driven by the company's expansion into high-margin overseas markets. The successful acquisition and integration of Lafarge's Nigeria operations, completion of aggregates project in Brazil, and advancing supply-side reform have all contributed to significant revenue increases. Additionally, the company has seen a 48% year-on-year increase in revenue from overseas operations, with net profit from these operations increasing over 50%. Other drivers of growth include digitalization and intelligent transformation, innovation-driven development, and mergers and acquisitions. On the other hand, revenue decline is primarily driven by underutilization of production capacity and continuous operating losses in certain subsidiaries. Market conditions and other factors affecting the group's performance have also contributed to a decline in revenue. Discounts on merchandise sales, significant financing components in contracts, and reimbursement of costs incurred by the company have all had a negative impact on revenue. In terms of specific numbers, the company has seen a 14% increase in cement sales revenue from RMB 18 billion, 30,536,669 in 2024 to RMB 20 billion, 587,005,554 in 2025. However, concrete sales revenue decreased by 15% from RMB 8 billion, 415,290,740 in 2024 to RMB 7 billion, 182,634,659 in 2025. The service business has seen significant growth, with revenue increasing from RMB 715 million, 946,000 303 in 2024 to RM 295,767,010 in 2025. The net income and profit margins of the company underwent significant changes between 2024 and 2025. On a year-on-year basis, net income increased by over 50%, with a notable increase of RMB 440 million or 18.09%. This growth was attributed to improved operational efficiency, enhanced risk resistance capabilities, and reduced costs through automation and digitalization. The profit margins also saw an improvement, with the cement gross profit margin increasing by 9.35 percentage points to 32.72%, while the concrete business gross margin rose by 3.44 percentage points to 15.46%. The operating profit, profit before tax, and net profit attributable to shareholders of the company all showed significant increases, ranging from plus 18.56% to plus 20.39%. However, there were also instances where the net income decreased due to impairment provisions, resulting in a minus 96.1% change from 2024 to 2025. Additionally, sensitivity analysis revealed that changes in weighted average cost of capital and gross profit margin used for valuation of mining rights led to a decrease in profit margins. The company's strategic initiatives, including overseas expansion and optimization of asset portfolio, played a significant role in driving growth. Overseas net profit increased significantly, with cement sales volume up by 25% and revenue up by 48%. The company also achieved cost reductions across various segments, including cement, aggregates, and concrete, which contributed to the overall increase in net income and profit margins. The company's financial performance is a testament to its ability to generate significant operating cash flow. The data presented across multiple pages of the report confirms this trend, with net cash flows from operating activities consistently showing positive results. In 2023, the company generated $6,235,555,071 in positive operating cash flow, followed by $5,977,317,233 in 2024, and a substantial $6,694,037,666 in 2025. These figures demonstrate a steady increase in the company's ability to generate cash from its core operations. The consistency of these results across different years and pages of the report underscores the company's financial stability and resilience. This is a clear indication that the company is generating positive operating cash flow, which is essential for its long-term sustainability and growth prospects. The performance of various regions within a company has been analyzed based on recent summaries. On the positive side, overseas markets have shown significant growth, with notable achievements including the successful acquisition and integration of Lafarge's Nigeria operations and the completion of an aggregates project in Brazil. Furthermore, countries where the company operates overseas are expected to experience economic growth exceeding 5% by 2026. Additionally, the overseas segment has seen a substantial increase in revenue, rising by $4 billion, accompanied by a significant boost in profit, increasing by $1.25 billion compared to the previous year. This indicates a strong performance from international operations. On the other hand, domestic markets have faced challenges, with the concrete business struggling and only achieving positive net operating cash flow for the first time. The domestic segment has also experienced a decline in revenue, decreasing by $2.2 billion, along with a decrease in profit, down by $217 million compared to the previous year. Overall, while overseas regions have demonstrated impressive growth, domestic markets have faced difficulties, highlighting areas that require attention and improvement for future success. Management is optimistic about the company's outlook, citing a shift towards industry differentiation and consolidation as key drivers of growth. The company is intensifying measures for cost reduction and efficiency enhancement, while investing in overseas mergers and acquisitions, M&A, to scale up its business. The company has established a robust risk management system to effectively manage risks and ensure the sustainability of its operations. Financially, the company has reported significant year-over-year growth in revenue and operating profit, with cash flows from operating activities also increasing by 11%. Management is focused on expanding and consolidating the company's presence in various markets, particularly in the cement industry. The company's strategy appears to be centered around investing in high-growth industries such as cement, while also improving its operational efficiency through cost reduction measures. With a strong risk management system in place, management is well positioned to navigate any challenges that may arise and drive long-term growth for the company. The company has a history of paying dividends to its shareholders. According to the provided information, the company has indeed paid dividends, with specific details available on pages 17 and 187 of the report. On page 17, it is stated that the total amount of dividends paid was RMB 956,337,998.54 at a rate of RMB 0.46 per share. This indicates that the company distributed a significant portion of its earnings to its shareholders in the form of cash payments. Similarly, on page 187, it is confirmed that the company has paid dividends, with each share receiving an amount of RMB 0.46. The total number of shares for which dividends were paid was 2,078,995,649. This further reinforces the fact that the company has a track record of rewarding its shareholders through dividend payments. That concludes the financial summary for Huaxin Building Materials Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.